Have a look at the massive performance of MYX Finance today. Up more than 250%. The bubble is almost larger than the entire screen. The question is why? Who's actually buying here? Who's selling here? What's causing this price dynamic? Let's have a look at the data most people aren't considering. Let's have a look at the on-chain data. Now, this is just the performance today. Have a look at the performance this week. The price of MYX more than 10x'd. Now, I've already covered the token 1 month ago. That video did not get that much views, but now with the secondary rally up, we do see more attention. So the average video is this gray area here, and the blue line, that's the first video on MYX, where we talk about the fundamentals of the project as well. The chart pretty much looks like a hockey stick, but the question is why? What's going on with the project? Why is everybody getting so excited? It can't be the capital that's in the project. So this is the total value locked. MYX, by the way, is a perpetual futures exchange. So it's a decentralized finance platform that allows to bet on the price of cryptocurrencies with leverage. This is just how much capital is currently locked in that platform. It jumps up and down and up and down, and especially in the last few days, we haven't really seen anything that justifies this sudden price rally. Now, the decentralized perpetual futures exchange market is growing quite quickly, and maybe some people are speculating on MYX getting a piece of the pie as well. But really, this is one platform amongst many others. It's mainly housed on the Binance Smart Chain. This is where most liquidity is. But the DeFi perpetual futures market in general is growing very rapidly. But there's a reason for that growth, and that's not MYX, that is hyper liquid. So here we see now the trading volume in billions of US dollars across different chains. Hyperliquid is in the 10 and 20 billion range, while the Binance Smart Chain tends to be below 1 billion. That's the area in green over here. It's barely visible on the chart. So really, what's going on here? If we don't see that the platform is growing that much, that there's more and more capital flowing in, what's actually causing this? Let's have a look at the on-chain metrics. So how many holders of MYX are currently on the Binance Smart Chain? Now we've got the total number of holders directly from bscscan.com. That's 26,389. But some of those holders, some of those wallets might just hold a few cents worth of the token. So you have to look at this in a bit more detail. Now on the left side, we see the number of wallets that have at least 100 MYX tokens. So at the current price, that's a bit over $1,000 worth of the token. In the middle, it's 1,000 tokens, so more than $10,000 worth of the token. On the right, it's more than $100,000 worth of the token. This is the last month, where the price went like this. But the number of holders didn't really go up. The number of whales seems to be at an all-time low. The longer-term charts since trading started for MYX are over here. Again, we do not see a long-term growth path for the number of investors. It's the same for all wallet cohorts, for small retail and for the whales. This tends to go down over time. This tends to be not a great trend that would support the current price development. So could this potentially be new developments that are coming up? Maybe the team is actively working on the project. Doesn't seem like this. This is the GitHub repository. So this is the place where developers make code changes, they adjust the platform, and there hadn't been any changes for the last years. Now this is only what's publicly available. We do not know if there's anything happening somewhere else, but the last updates had been in October and in November of 2024. Scanning the news also doesn't give us anything that hints towards the price rally. There's only the listing of WLFI, so World Liberty Financial, which can be traded on pretty much any decentralized perpetual futures exchange. So really, what's causing the recent rally? And at what point might this potentially turn around? Does it potentially make sense to bet even on falling prices? Maybe we don't want to buy into the rally, maybe we want to bet on falling prices here. Let's have a look at where the price discovery happens. In the last 24 hours, we saw 348 million worth of trading volume, again on the spot market, on BitGet. Now compare this with the perpetual futures market. Here we had more than 10 billion worth of trading volume on Binance alone. It is interesting how sometimes the funding rate for MYX turns massively negative. This is when there's more short investors than long investors. So most people on the perpetual futures are betting on falling prices and are willing to pay very high interest rates to bet on those falling prices. That's when it's very profitable for the market makers to buy up more of the token, because then the shorts get liquidated and the funding rates get directly into the hands of the longs, of the market makers. Currently, by the way, the funding rate is still negative. It's not as negative as it used to be, but it's definitely strong on the short side. This 0.5% funding rate, that's for every 8 hours. If we annualize this, we get this to roughly 50% per annum. And so here's the open interest. And this is really where now all of the price discovery happens. We've got 400 million worth of open interest on MYX. So 400 million worth of bets on the price. And again, this is the trading volume of MYX. When it's high, the price tends to be high. When this is low, the price tends to deflate. And this has reached a new all-time high. So here's what's mechanistically going on. Enough people are betting on falling prices after such a rally, right? We see the rally, we all say it's market manipulation. This is not natural, it's not fundamentally driven. The price is just shooting up, and so enough people are betting on falling prices. Now, as more and more people bet on falling prices, we tend to see the counter position getting opened by the market makers. You might notice this when you open larger amounts. Let's say on MYX, you open 500,000 worth of a short. When you do this with a few transactions, you will notice that the open interest during the same time is double that amount. So you open this just with 500,000, but the open interest at the same time gets up by 1 million. That's because the counter position is opened by the market makers. And so if the market makers have enough of a long position in a price, if enough people have bet on falling prices, they are just buying up the spot market. Because the spot market is not very liquid, it doesn't take that much money to move the price. We've already seen how there's much more trading volume on the perpetual futures versus the spot market. And so when there's enough open interest, when enough people bet on falling prices, that's when the market makers buy up more and more of the spot market. They already opened the counter position on the perps, but then in order to move the market in their favor, they're just buying up directly on spot and influence the outcome. You can imagine this a bit like with a sports betting house. Let's say you can bet on either team A or team B winning, but let's say you make that bet with a sports betting house that at the same time has also bribed the referee. They have an impact of how this game will end. So if enough people just bet on a certain outcome, the referee just gets paid to let the other team win. And so that's what's happening, right? We've got the perpetual futures that have all of those bets, and then the outcome is influenced through the purchases of the spot market. Just have a look at the massive extent of short liquidations on MYX. It's now at 50 million, and that money goes straight into the pockets of the market makers in terms of liquidation fees, but also in terms of simply having the counter position opened. And so I showed this chart 1 month ago in the prior video. We had a similar pump, and so the question is just at what point will we see a deflation of that rally? We saw it relatively late, and very likely we will see again a turnaround, but the question is really, when will that turnaround happen? The market always takes the route of maximum pain. And while there had been already a lot of pain, a lot of shorts got liquidated, net there is still negative funding rates. So there's still enough people that hope for the price to come down. In other words, shorting MYX right now is still quite dangerous. Whatever short currently gets opened has to also be aligned with a very close stop loss, because we could see a secondary rally, a secondary short squeeze at any point in time. What we're seeing here is the classical situation of a short squeeze. Something similar we have seen with GameStop. Right, with GameStop, it was the hedge funds that were betting on falling prices, and it was the masses that bought up the token. Here it's the exact opposite. The masses are shorting the MYX token, and the hedge funds or the market makers, they are buying up the token. Now with content like this, I don't just want to help us beat the market. I don't just want us to make more money. I actually want to really have an impact on financial literacy. I want that after watching some of the videos here, you will act better with your overall portfolio long term. Because while it's nice to see back tests like this that tend to outperform just buying and holding Bitcoin, and it's also nice that there's now a copy trading pool where people here in the membership get very high outsized returns compared to the risk. And why those strategies also work pretty well for me over time, right? The gray line is buying and holding Bitcoin. The black line is what I achieved over the last 4 years roughly. And while all of this is nice and useful, what really matters long-term is risk-adjusted return. Because many people become millionaires short-term on paper to then just afterwards lose it all again. I know it's not a sexy topic, but really what matters long-term is skill. It's not just figuring out a single market. It's about figuring out how to manage wealth long term, how to be able to preserve purchasing power and build upon this year over year. For example, have a look at this video here. The very first video that I published in Premium, the different steps of wealth building. When should we move from selling our time to actively trading to then just allocating towards a portfolio? How can we in general take advantage of our monetary system since the money supply is expanding all the time and the US dollar is devaluing? There are a few winners in the system, but most people lose. And this video explains how this all works and how we can take advantage of the monetary debasement. Or this here, the fundamentals of portfolio allocation, or how to hedge macro risk, right, step by step. Or here, things like long-term expected returns and target allocation. Because that's a problem with most people. Most people just wing it. They don't really think about this deeply. How much should I have in crypto and in stocks and in gold and in property? How is this properly split up? How should I adjust this based on how I see the economy going? What's actually reasonable? These questions are much more important than trying to find the next altcoin. We can even dive a bit deeper into the numbers and try to risk adjust individual positions and calculate things like alpha and beta. People throw numbers like alpha around all the time, but they don't really know what it means. Individual winning trades are great. And yes, we do have this in Premium as well. And I share my individual trades as well. But really, the thing that really matters is risk adjusted long-term outsized returns. Making more money than just buying and holding stocks or just buying and holding Bitcoin. Having the right mix, having the right rebalancing approach, knowing exactly how to approach different situations. That we don't have to ask ourselves, should we buy this crash or should we now sell because the thing went up? We actually have a systematic approach, again, that most people don't have. I know this is not the sexy sale. The sexy sale is to just talk about the next 100x altcoin that more likely than not will go to zero. But even if you're lucky enough to hit the next 100x, the chances are that you're going to lose everything again. Most lottery winners are going broke 5 years after the win. It's unlikely that you're going to make money with any of those predictions. But even if you do, the likelihood of losing it all afterwards is extremely high. It's much better to take the time and learn the actual craft of proper wealth management. And only then, once you know what to actually do in certain periods, in certain situations, only then can you keep and steadily grow wealth. I do not believe that you can just wing it. It's simply too complex. You can actually watch all of the Premium tutorial videos just by signing up for $125 per month. And if you don't like what you see, you can just message me within the first week and I refund you 100%. If you want to become part of the next copy trading pool, which right now is closed for deposits, but a new one will open at the beginning of next year, then you can also consider joining the yearly membership. So yearly members will get access to the copy trading pool the earliest. And so be careful who you trust out there. Don't just gamble with your wealth. Try to accumulate enough wealth at the beginning by selling time, have enough capital to invest, and then grow this slowly over time in a smart way that there's still outperformance, but there's not too much risk. Long term, again, it's all about risk adjusted returns. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.